It's true. Across the globe, women aren't as prosperous as men. Gender inequality is a pressing moral issue, but we forget it has massive economic implications. If you were to put all of the women who don't have access to formal financial services in one place, they would make up the third largest country in the world. That means an entire population without bank accounts, credit cards, or other tools you and I likely benefit from daily. Prosperity for women starts with inclusive policies, products, and people around the globe, and the investment to make it happen. Welcome to the Making Finance Work for Women podcast. Join me as I speak with changemakers around the globe to deconstruct the social and economic exclusion women face. We'll discover new evidence together and drive action to accelerate women's economic empowerment. Because a leg up isn't a handout, it's a global game changer.
Welcome, and thanks for tuning in to the Making Finance Work for Women podcast, now streaming on YouTube and available wherever you get your podcasts. If you're listening on YouTube, you'll be able to find additional insights and resources linked in the description of the video. I'm Mary Ellen Iskenderian, President and CEO of Women's World Banking, and today I'm stepping into the host chair and into the shoes of my colleague, Dr. Sonia Kelly, for a special episode of the Making Finance Work for Women podcast. For those of you who are tuning into our podcast for the first time, let me tell you a bit about what Women's World Banking is about. We are dedicated to the 700 million women excluded from the formal financial system. Women's World Banking partners by providing advisory services to financial institutions and policymakers to design and develop solutions and policies that facilitate systemic change for women. But we're also an investor where we advance women in the workplace and as customers by taking direct equity stakes to bring financial security, prosperity, and independence to women. Before we get started with our conversation, I'd like to give you a special shout out to the sponsors of the Making Finance Work for Women podcast. Ernst & Young LLP. EY is a global leader working across assurance, consulting, law, strategy, tax, and transactions. EY teams ask better questions to find new answers for the complex issues facing our world today. Visit ey.com to explore their latest insights and services. Now, let's jump into the show. Today, we're going to be getting a first look at the World Bank Global Findex data, the world's most authoritative source of insights on how and why people use or don't use financial services. Some of the headlines of the data that's just been released this week include that 77% of women around the world have access to accounts, and that's up from 71% 3 years ago. And yet, 700 million women are still without the most basic of financial services. If those women were just one country, it would be the third largest country in the world. I'm so pleased and excited to see progress, but there's still much work to be done. More than 25% of women in low and middle income countries experienced extreme weather events, and a third of them lost income as a result. And in countries that did not have good digital infrastructure, where people have to travel to a bank or an ATM to get access to the money, they lost access during those natural disasters. And we saw people much less willing to keep their money in banks in the first place. As you'll see, there's a strong relationship between connectivity and financial services access and use. 79% of women in developing countries own a mobile phone, and 40% of women in developing countries use the internet daily. We can see a significant market opportunity for financial service providers. Despite three-quarters of women around the world having an account, only 11% of them are receiving wages into that account. And as our conversation progresses, we'll see why that's so important. At Women's World Banking, we care deeply about this data because we know that through women's financial inclusion, we can unlock business and economic growth for opportunities for everybody. We know that when a solution reaches and works for women, it often reaches and works for men too. Let's take a look at just one emerging market. In Cambodia alone, according to this latest Global Findex, 63% of women remain unbanked, and only 10% of wage payments are deposited directly into account. Women's World Banking worked alongside one of the largest digital banks, Wing Bank, to shift this reality. And that's where we got to know a woman named Shrena Shab. For years, Shrena had sent money home from her job through risky, informal channels, sometimes losing everything in the process and never really knowing if the money had landed where she had intended it to. But with access to a secure, affordable digital account, she can now send remittances quickly, safely, and at much lower cost, empowering her to not only support her family in Thailand, but also to begin saving for her dream of starting her own business. But this isn't just about numbers or financial transactions. It's about what happens when women are trusted with tools to build resilience, make decisions about their money, and create new opportunities for themselves, their families, and their communities. That's why these numbers are so important, why they matter so much, and why we won't stop until every woman has the financial access and tools she deserves to thrive. So, while huge progress has been made, there's still a lot of work left to be done. And that's why I'm so excited to dive deeper into the data with the founder of the Global Findex, lead economist in the Development Research Group at the World Bank, Leora Klapper. Welcome, Leora.
Thank you. It's so nice to be here. Women's World Banking has always asked the really smart questions that have encouraged us to push the analysis of women much further.
Oh, well, thank you so much. And thank you for including us in your report as one of the World Bank's consultation partners. So let's dive into the conversation. Leora, we always like to start our episodes by asking sort of what's the origin story of our guest? How did you get into this financial inclusion space and what brought you to where you are today?
So I've been at the World Bank for over 25
Oh,
years.
my goodness.
And for many years, I was working on entrepreneurship. And even here in the US, most entrepreneurs depend on their personal saving, their personal credit card assets to finance their businesses, especially at the startup stage. But we really had no data globally on people's personal finances, whether women around the world had a saving account. At the time, the only data we had on account ownership was that provided by banks to regulators. But this was pretty much a black box of data. I wanted to know how many women had accounts compared to men, how many poor adults were saving compared to wealthier adults, rural residents, young adults, less educated adults, and more. So at the time, it's also as you know, it's very hard to collect survey data. And I was sort of overwhelmed by the thought of collecting data in 100 countries. But we discovered the Gallup World Poll Survey, which since 2005 has collected data, nationally representative data in over 140 countries around the world. Discovered the Gallup World Poll Survey, which is an opinion poll, which they do by interviewing over 150,000 adults around the world over the calendar year in over 140 countries. And so we collaborated to add questions of financial inclusion onto this pre-existing survey, which has been a tremendous collaboration and allows us to collect very high quality, nationally representative data around the world. And most importantly, allows us to splice and dice the data by all kinds of individual characteristics, such as gender, income, age, education, rural residence, employments, and more.
That's That's fantastic. I'm so pleased that the data led you to this moment. The report that just came out this week shows that 79% of adults now have accounts, which is an increase of 28 percentage points since 2011. So, is the job for universal financial access done in your eyes, or is the work complete? Is there a shift in the conversation that needs to happen?
No, I don't think we can hang up our hats yet. Um, I mean, you gave the example of Cambodia, where only 35% of women have an account. Um, there are many countries where less than half of adults have an account. There's still dozens of countries with significant gender gaps. We really need to address some of the foundational challenges in these countries, including, reliable broadband, fast and interoperable payments, certainly importantly, consumer protection, strong and enforced regulations and consumer protection frameworks, as well as access to ID, um, and more. We also have the example of India, where although 90% of adults, both men and women, have accounts, just based on sheer size, has the largest number of unbanked adults in the world. And there we're talking about a very sophisticated, developed financial system, which may have different tools in order to reach the unbanked. And then finally, it's not enough to just have an account. Now we have the exciting opportunity with almost 80% of adults on average having accounts. How can we encourage greater use of the accounts and ultimately helping people improve their financial lives, build resilience, and achieve their financial goals?
All right. So, still work to be done. But what would you say is the most surprising or even headline worthy insight that you gained from the Global Findex? And if you could tailor that for women's financial inclusion in particular.
So today, 40% of adults in low and middle income countries are saving in a formal account, whether it be in a bank or similar account, or on a mobile money account or app or fintech account on their phone. That's exciting, right? So what we're seeing is that's a 16 percentage point growth just since 2021. And so people are both saving more overall and saving more formally. And we really think this is driven by the accessibility, convenience, affordability of a mobile enabled accounts. So everything from I've had the real pleasure to travel over 30 countries to pilot the Findex questionnaire, and ask people questions about their financial lives. What really seems like mysteries to us sitting in Washington generally makes a lot of sense to a poor woman in a lower middle income country. And so one of the things we heard, we were in Malawi and Zambia last year, um, was how people open their mobile money account in order to save. And I was asking, who do you send payments to? And they said, no, no, no. It's every day. I had saved my money in my home and there was a flood and it washed away. And so now every day I can conveniently give the mobile agent in my village. We saw at his folding table collecting the money on behalf of the mobile uh, money provider, collecting that money, and the money's kept safely outside the home. We also know that could reduce impulse purchases. Also, for women who often struggle to keep control and privacy over her money, this allows her to keep the money outside her home. I always tell the story of Ghana, where in 2017, we found half of women with an account were only saving using these susus. The guy in a moped who picks up like $1 a day and gives it back to her at the end of the month, less a day saving. So women are paying money to save money outside the home. So I went to Ghana and sat at home and like, why are you doing this? You have a bank account. And these women explained that they're not going to take a bus across town to wait online, deposit money, and they wanted to save $1 every single day. Um, and what's so exciting is that very rapidly today, that woman is depositing her CDs directly into the mobile agent on her block. And formal saving in Ghana is as high as in China.
That's amazing. Are we seeing just, the mattress money coming into the system, or is this an overall increase in amounts that are being saved?
Right. So in 2021, it was mostly the shift from informal, both under the mattress, but also using self-help groups and other less safe ways of saving, to it was shifting to accounts. Today, we're seeing both an increase in overall saving and an increase in formal saving. And part of this is the whole digital ecosystem. As more people are receiving their income, their wages into an account, it's easier to leave a little bit there. We've added new questions on, do you withdraw your full amount on payday, or do you leave some in your account? And the majority do.
Oh, that's great.
And it's, you know, what we believe is that, in the past, if you kept some of your money in the bank and you needed it to buy your groceries, you'd have to travel to the branch or to the ATM kiosk, maybe incur a fee to get your money to buy your groceries. If you could buy your groceries by tapping your phone, then you're more likely to keep your money in the account, more likely to build your saving.
So this sounds like a great time to ask you about this new element that you brought into the Global Findex this year, the digital connectivity tracker. As I understand it, that's measuring access to and use of mobile technology. Tell us a little bit about what the tracker is finding, and why was this so important, and what has it told us about financial behavior as a result of the introduction of digital connectivity?
So today, mobile technology is driving financial inclusion, but we don't want to leave women behind at the starting gate because they don't have a phone, which we do see in some South Asian countries. And so the data was actually added at the request of, because of our specific interests in women's access to digital connectivity. Um, Interestingly, we find most men and women around the world today have a smartphone, with exceptions being in sub-Saharan Africa, where, interestingly, women are as likely as men to have a basic phone, but there is a gap in the more expensive access to smartphones, which may only be owned by men who might be using them for business, for example. And in South Asia, where we see some very significant gender gaps in the personal ownership of a phone. This might be related in some countries to women's overall lower asset ownership, perception that she owns a household asset like a phone, as well as simple affordability of the handset. And interestingly, countries like India, which are moving rapidly to smartphone ownership. Um, Women want to connect on social media, both for the connectivity, but also increasingly to get information. So we ask questions on basic access and ownership of phones and access use of the internet, as well as a really interesting new panel on how you use the internet. So we're finding over 70% of women with a smartphone accessing social media. We're also finding about a quarter of adults accessing government information or services online, at 20% online learning, including new skills to grow her business, perhaps. Um, and then we also find about 8% of adults, both men and women, using the internet to earn income via an app or website. And that's interesting. And the numbers are even higher in East Asia. We find over 10% in all these Asian countries, the exception of China, where we don't have the data, are earning money via an app or website.
Really, really fascinating. And yet, we still see cash is still king in a lot of places. And some of that is driven by whether or not you receive money into a bank account. I told the story in my intro of Shrena in Cambodia, whose life as a woman sending remittances home was dramatically changed when she was able to receive digital wages. What kind of data did you see around that ability to have money deposited into account? Are there gender differences? Women receiving direct payments? What can you tell us about wage transactions?
So one of the really notable patterns we're seeing is the growth in the digitization of payments. So today, 3/4 of adults who receive a government payment, so either a transfer payment, but also a government wage payment, even more so a government wage payment, are receiving it directly into an account. This is important for the person receiving the money. It's usually easier. It's also safer. They're not coming home with a wad of cash in their pocket. We also know from the government's perspective, it's not only cheaper and easier, it could also improve transparency and reduce leakage, make sure the money is going to intended recipients. We're also finding about half of uh, about half of adults receiving a private wage payment are receiving it directly into an account. Um, Certainly, there are issues around formalization, taxation, which the worker doesn't always have control over how they're paid. So their employer may prefer to pay them in cash. Um, but the fact that half are receiving the money into an account has tremendous opportunities. I've been doing some work with colleagues in Bangladesh, for example, where we working with factory workers where half started receiving their money into either a bank or mobile money account and half continued receiving cash. And the group of mostly women receiving money into an account doubled their savings. Um, and where did it come from? The amount that they saved, they spent less on impulse purchases like chips or soda. They were more likely they were less likely to say they skipped meals at the end of the month. Um, it allowed them to build their financial resilience. Interestingly, they also improved their financial savviness. In fact, women paid into and then paid into an account were more likely to use an ATM machine on their own. They were also less likely to say that they made were required to make informal payments to local mobile money agents around their factory on payday. In other words, women who were paid into an account had greater learning by doing. They had greater experience using their account and became better, improve their financial capability.
And now, a word from our sponsor. EY applauds Women's World Banking's 45-year legacy empowering women through financial inclusion. Together, we have a common vision to build a better financial services industry, one that is stronger, fairer, and more sustainable. Find out more on ey.com.
So we've heard about the benefits to the recipient of these payments, but your tracker talks about the broader ecosystem, and there's been a sharp jump in merchant payments. Why is that so important? What kind of differences is this increase in merchant payments to that ecosystem?
So yeah, we saw big increases in many countries, especially in Latin America, Eastern Europe, and Central Asia, really across the board, East Asia, in the percent of adults who made a payment, who bought groceries or other goods in store or online using a card or phone. If I'm, sitting in New York, we just think of this as a convenience. It's easier for me to tap my phone than to carry around cash. But for people in developing economies, it's really a game changer. First, it's a lot safer. Crime is much higher. You're not walking around with cash. And that's also for the seller, not to have as much cash on hand. But the exciting innovation is the use of these payment records, the potential to use payment records to access credit. We have many examples. The challenge for a small business to access credit is simply they typically don't have a credit history, right? But if their customers are paying them directly into an account, you now have an electronic record. And so electronic record can increasingly be used by lenders to assess credit worthiness. In addition, the additional step of embedding the finance, so if the lender is paid directly, diverting the money from the seller will reduce the recourse risk as well. So taken together, the lender is able to reduce both their credit risk and their recourse risk. They could potentially extend credit at fairer rates. I'll give you an example. So we were in Ghana piloting the survey with a woman selling tomatoes in an outdoor market. And everyone's, while she's talking to us, she's not going to lose any sales. She kept selling her tomatoes and people kept tapping. We saw them paying by phone, just from probably an ordinary mobile money P2P account. And she was telling us how in the morning she borrows money from an informal lender in the market to buy her inventory and pays him back twice the amount she borrowed every evening. 100% return. And she now has a digital record and money going through formal channels. And so, again, this is where there's experimentation in trying to link a formal source of credit to these payment flows, formal payment flows.
Right. Just to pick up on your story in Ghana, I'm very focused right now on Africa. The G20 presidency is held by South Africa. Women's World Banking is holding a very exciting, this is a bit of a commercial announcement, a very exciting financial inclusion forum in Johannesburg on September 9th and 10th, which is on the sidelines of those G20 meetings. There's clearly a lot going on in Africa, different models, both bank-led models, digital models. Kenya was the birthplace of mobile money with M-Pesa. Tell us what you think from a commercial perspective. Where is there money to be made? Where would you direct investment if you could, based on the data that you're seeing coming out of Africa?
So the big trends in Africa as well is, first of all, just really big increase in account ownership driven by mobile money accounts. And there are different models. So in many countries, we have countries where we see a decline. People are moving away from their bank or similar accounts towards mobile money accounts, which are just more accessible, affordable, financial services. Excuse me. We're also seeing just this really large growth. 1 in 4 adults in sub-Saharan Africa is saving in a mobile money account. And there typically aren't formal saving products offered by mobile money, but yet it's people's perception. We ask them, are you saving money for the future? Did you put aside money? And they say, yes, I'm using my mobile money account to do so. And so, likely it's enabling people to manage their monthly money, right? So rather than keep the money under the mattress to pay your monthly bills, the money is safe and outside the home, which again, we know is especially important for women who often have household demands on their money to borrow, or money is more likely to be stolen from the home. So being able to keep your money safely outside the home is a way to enable especially women in Africa to meet these monthly bills and save for longer term goals. The next step will clearly be to try to make that money, to help women invest that money in more productive purposes, whether it be interoperability with banks so that money saved in a mobile money account can be easily moved into a bank account where it can earn interest and start to develop a credit history. There will also be opportunity. I think there are also growing opportunities for online sales. Globally, people making purchases online is growing, and the percent who also pay online has also grown. Even in 2021, most online purchases paid cash on delivery. Now that's shifting to online payments. And so suddenly you have and with the growth in the digital economy, more people selling goods and services online, everything from, an artisan in Senegal who's now selling her jewelry regionally, to someone, a small hotel owner who's now people are able to book their rooms online. All this is pointing to people receiving their income into an account, which is, again, is another market opportunity once the money is coming into the account to help people save, to reinvest and grow their businesses.
Wonderful. That's really wonderful. Bit of a shadow side question here. Unfortunately, we know that just because you're included doesn't mean you're necessarily fully empowered, or that you may not even feel that you're entirely financially healthy. What is the Findex data telling us about financial inclusion and increased resilience, particularly for women?
So although the percent of adult saving has increased, this does not get translated into increases in the percent of adults who say they could reliably come up with extra money in 30 days in the case of an emergency. However, there are signs pointing in the right direction. So, for example, it's still the case that the majority of women say they would depend on family and friends, and that the money wouldn't be there when she needs it.
Mhm.
We added these questions on how reliably your source of money would be. When we were piloting in South Asia, and a woman would say, "Oh, I would ask my sister," and I'd finally say, "Well, how likely is it she'll send you the money?" And she would reply, "Oh, her husband would never let her send me the money."
Oh,
So even if her source of money probably wouldn't be there if she really needed it. Also, like COVID really showed us that systemic shocks make your social insurance networks less reliable. And if you think about extreme weather events, natural disasters, which are growing in intensity and frequency in low and middle income countries, if it affects your whole community, that money from your family and friends may not be there. And so it's really important to build more reliable formal sources of resilience. However, get to that point. We are seeing in most regions that the percent of adults who say they would depend on saving is increasing.
oh, great.
And almost everyone who said they would depend on saving say it would be there when they need it. Um, the regions where we haven't seen as much increase in saving as a form of resilience is, for example, in sub-Saharan Africa. And there, that's the region where people are primarily saving in mobile money accounts, and that's probably more a short-term saving as a way of still playing a tremendously important role in people helping themselves manage their money over the month or meet specific goals, such as having the money on hand to pay for a student's school fees.
Fantastic. This is who knew that savings was going to be the really exciting go-to figure from this year. Which brings me really to my last question. What's the one data point or finding from this year's Findex that you think will have the biggest potential to unlock economic growth opportunities for all?
So one interesting finding about economic opportunities, I mentioned, this growth in the digital economy. So you want to think about, do women have the tools that they need to engage in the digital economy? So we're finding that a quarter of all women in low and middle income countries say they're self-employed. Of those women, 70% today have a financial account. So as opposed to the past where a woman, a merchant, likely an informal businesswoman, was keeping her money in her pocket or at home, 70% of those women at least have the opportunity to keep their money in a formal financial institution. We're also finding that 30% of these self-employed women say that they saved in the past year. And so taken together, the question is if these women entrepreneurs, even if they're providing informal goods or services, are keeping their money in a financial institution, how can we help them grow their businesses? Because at the same time, almost 20% of these self-employed women are borrowing, although almost all of these women say they only borrow from informal sources.
Basic.
So, on the one hand, we have this opportunity of more women being financially included, more women formally saving, but at the same time, they're primarily depending on informal sources of business borrowing. And so unlocking that potential would be a tremendous
Yeah,
benefit.
really huge. And just a plug for some of the women's world banking research, we're seeing some really strong. Um, you are always so importantly pointing out correlation is not causation. So we're seeing correlation between increased access to credit and job creation. So unlocking those formal sources of credit now that you've built some of the trust, as you say, in formal savings and having an account for those women entrepreneurs is going to be key. Leora, I could talk all afternoon. Thank you so much for sharing this. And this data is just new to us all. So you were quite brilliant in having all of these facts and figures immediately on the tip of your tongue. Thank you so much for being with us.
Thank you. Please visit our website at globalfindex.worldbank.org for the report, videos, and lots more.
I am just going to be digging into this data myself, but I can't help but really want to double click on some of these savings pieces of findings, particularly as they as they relate to digital savings and people recognizing the opportunity to save in their mobile money account, which may not be your traditional savings product, as Leora says, but it's still a safe place for people to keep their money outside of the home, and channeling that into other maybe more productive products is a real opportunity for all of us to be looking at. I just can't wait to read some more in as we sign off here. Just don't forget, all of you, to download the 2025 Global Findex report. At Women's World Banking, we firmly believe that it's only what's getting measured that we can get managed. And be sure to watch our social channels in the weeks to come as we dig deeper here at Women's World Banking into the Global Findex data and draw some more conclusions on what it means for women's financial inclusion. And if any of this conversations intrigued you, and I certainly hope it did, I encourage you to register another commercial announcement for Women's World Banking's forum, Unlocking Growth Opportunity for All, which is taking place on September 9th and 10th in Johannesburg, South Africa. We're looking for policymakers, practitioners, entrepreneurs, the whole investors, the whole gamut of players to join us there. So thank you so much again to Leora, and I look forward to hearing this data talked about and utilized, more importantly, far and wide. Thanks.